Hello, my name is Jonathan Valdez. Today I'm going to be going over my livestock portfolio and how it's built, and then as well as providing some recommendations or justifying these recommendations on why I chose these stocks. Um, so just to kind of jump everything off, uh, I'm going to go into the different tiers in cap size. So I have four large market cap size stocks, which are going to be stocks that you know of, like Microsoft, JP Morgan Chase, Johnson and Johnson, and Visa. These are big companies. They have very large market cap rather. And then we have mid market cap stocks. So this is going to be smaller companies that you may not know, but you may also know, like Celsius is a drink that you find in gas stations, like an energy drink. And then Texas Roadhouse, a lot of people go there to eat. Um, and then even like Deckers Outdoor, it's a company that owns companies like UGG footwear. And then I have five smaller cap stocks, which may be companies you don't know, kind of smaller companies, um, but have the potential to do well. So I have number of shares uh, in this row or column rather. Um, and then I have the price paid per share. So how I'm extracting this data is using Google Sheets. So create this spreadsheet, import it into Google Sheets, and then just make sure we're pulling the correct formulas, which is just pulling from Google Finance, and then using the symbol right here, which is the symbol for that stock, and then the price, the current day or today rather, and then going back 30 days and looking at what that price was 30 days ago. So it's the weekend, right? These stocks aren't going to update right now because it is the weekend. The stock market's closed. Prices don't really update on the weekend. Uh, so we're getting the total amount that we paid. Uh, the total amount that we paid is going to be right here, which is the cost of the number of shares times that price the stock was 30 days ago. And then the current price is just pulling the prices for today. Pretty simple, right? We're looking on Google Finance, of course, the symbol, and then the price. And that's how we're getting this real-time data that will update with the current prices. And we're taking the current price, multiplying by the number of shares, and that's how we're getting the total current value. So you can see we spent 1.6 million and our current total value is 1.9 million. So that's giving us a 24K increase. The net loss or the total gain and loss is going to be split between either red with parentheses. So parentheses means negative, red means negative, or green without parentheses, which means positive. So we have a lot of red and we have a little bit of green, but it is this green that is making sure that we're right now in the positive. Um, and then just the percentage of losses. So what this number is uh, compared to what we've actually gained, compared to what the stock was valued at, right? So $22,000 when we first bought it. Now it's $75,000, and that's how we're getting this percentage. Um, so we have these visual representations, which is just a representation of these numbers right here. So we have the total allocation right here. And then like for Visa, right, 102K, 102K. For Texas Roadhouse, 256,000, 256,000. So it's just a visual representation of this column right here. Similar with these stocks by the sectors, it's a visual representation of the sectors right here and the current prices within those sectors, or current value rather within that sector, and how much we have invested in that sector. So technology, we have this invested. Pharmaceuticals, we have this invested. So it's really just taking the sum of each of those valuations and the correlation to the sector that those valuations are in. And then we have another visual representation of the total cap size and how much valuation are within those cap sizes. So we have the large cap size 210K, medium to 444K, and then small $436,000. And that's just, again, a visual representation of what that looks like. Uh, so next, I'm just going to go into the different stocks that I chose and why I chose those stocks. So starting off with Microsoft. Everyone knows Microsoft. It's a very big company. It's a global company. It's around the world. They're in gaming, they're in computing, they're in software development, they're in AI. They're going to continue to grow. They've grown for the past 3 or 4 decades that they've been around, and they will always grow. The only risk that is associated with them is just the competition between Amazon and Google. So it's risk, but it's not super risky as far as Microsoft goes and investing into the stock. JP Morgan Chase, that's going to be the next stock that was selected. Again, they're the largest banking system in the world. They have a lot of diversification through operations, banking, investments, commercial banking, and then asset management. Uh, a lot of growth potential again, between like wealth management and just global markets in general. Um, they Some of the risk factors is just the decline of capital markets right now, and then just weaker spending on the consumer. They're not spending a lot of money. So then Johnson and Johnson is next. We're focusing on the pharmaceutical aspects of Johnson and Johnson, because they kind of have their hands in a lot of different things. Again, just diversifying in healthcare. They're huge diversification in healthcare. They got a lot of different areas that they're in. Um, a lot of stable earnings and growth. That's why they have a large market cap because they're very stable. So some risk factors is just the cost of drugs and potentially legislation that is forcing them to kind of put lower those costs. That could be a major issue for this company. So going into Visa, part of the financial services market, they operate the world's largest retail electronic payment network, and they are across multitude of financial institutions within 200 plus countries. So they will continue to be around and grow. Some of the risk factors, again, is just weaker consumer spending. And then they kind of have some scrutiny over how they charge their fees because they charge fees to both the vendor and the consumer that's using their card. So it's kind of double dipping. I can see that being an issue, especially as things get more expensive. So Decker Outdoors is a footwear company. They own places like UGG, or companies like UGG rather. They offer premium footwear. They're looking at global market distribution. So a lot of potential for growth. Some risks associated with them is just the tariffs and what's happening with the tariffs. It can, be an issue for them. Restoration Hardware, another consumer's good place. They focus on furnishing, luxury furnishing. Um, so yeah, that's great. However, risk factors again can be kind of a weaker housing market and those tariff costs. However, they do kind of focus on higher end consumer retails. So I see potential for growth there. Celsius Holdings, again, it's a company that focuses on drinks, energy drinks. They also have distribution through Pepsi Company. So that's great, right? A great partnership with Pepsi is obviously awesome, and they're very health conscious and focused on kind of health conscious consumers. So that's a nice little niche market to get into. I think a risk factor is just having a full dependency on Pepsi Company and that distribution that could be a problem. Um, and of course, their competition is Red Bull and Monster, which do very well. However, they're slowly growing, and I think they'll continue to grow. Texas Roadhouse, again, a consumer place, restaurant that focuses on meat, beef primarily. Um, Always busy, constantly busy, very well priced, which kind of I think makes them busy, gives them a little bit of a competitive edge because they're very well priced. Risk with that is the rising cost of beef, right? That may cause them to have to raise their prices. Um, and then which can be, can make their margins suffer. And it can kind of throw consumers off. So it's just something to consider with that. But again, I think they'll continue to grow. Matador Resources is an energy company that focuses on gas and oil production. Um, so yeah, they have diversification around the world, and they have a low break-even cost, which is great. I think the issues is just the price in oil and its volatility. It's not ideal right now. However, that's for right now, right? I think there'll be growth in the future once everything kind of calms down, and they're able to kind of figure out the infrastructure situation, which has caused a lot of debt within the company, just trying to figure that out. But it's currently doing well right now, right? It's one of the stocks in the green. So Fortinet, this is of course the best stock that we have, huge profit margin right now. They focus on cybersecurity and AI initiatives and kind of bringing AI into security aspects. AI is a very big thing. It will continue to grow. I think a risk factor is just the competition is stiff, and a lot of people use AI, and there's a lot of cybersecurity companies. So I think just fighting that is risky, but with risk comes great reward, as we see here. So Joby Aviation, they oversee electric. So they're actually developing, actually rather, an all-electric air taxi in partnership with Toyota and the U.S. Department of Defense, right? The DoD is great, or Department of War, whatever you want to call it now. But yeah, I think getting in with them, getting some contracts secured with them, a lot of potential for growth, like a lot of these other stocks, right? Some risks is just not being able to get in with the DoD, losing contracts out, and then of course like FAA certification that can always be a risk. Um, so Kava Group, another place that focuses on Mediterranean food, kind of comparable with Chipotle. I think they can be great. A lot of potential for growth. They have high growth potential just from underpenetrated national restaurant footprint, right? So kind of growing into that national recognized brand. That's the goal. Uh, of course, with that comes potential risks of just competing with places like Chipotle, which, that's just part of the game. But I think they have the potential to scale up their operations pretty massively and make some pretty good money. So Agios Pharmaceuticals kind of focusing more on like rare blood diseases. Uh, a great place, right? They kind of focus on a niche market, and that gives them a competitive edge by focusing on that niche market. The only issue is it costs a lot of money to focus on things like that. So that could be a risk, is just the cost, the capital it takes to penetrate a market like that. However, I see them continuing to growing and focusing on biotech growth is kind of what we're looking at here for this company. So Alchemy Technology is a cloud-based digital banking service that services credit unions and community banks, and they help these institutions kind of modernize their banking experience. A lot of focus on AI and whatnot, and cloud-based services. So this is obviously great. I think there's growth for like subscription-based recurring models, which is great. Of course, risk factors is just profitability and timelines. That can be an issue if it takes so long to become profitable. However, I think they'll do great, especially today's market. And then the last one is Pallet Industries, just manufactures the power distribution and control equipment for data centers, utility centers, and then industrial facilities. And then lastly, AI-driven infrastructure. So, that's great. AI is great. Bringing AI into those things is great. The issue is the cost of capital it's a lot of money for infrastructure like that, and so that can be a risk factor for this company. However, I see it doing well in the future. It's holding well right now in a volatile market, so that's a good sign. So yeah, this is the portfolio, and I tried to keep in mind like the potential for growth and long-term investments for these companies. Um, so yeah, thanks for meeting with me and going through my presentation.